Hi, this is Bob Iaccino, Head of Market Research and Chief Market Strategist for TrendyTrade with your market preview for the week of July 17th. A lot going on this week, most of it again happening later in the day. As I come to you right now, futures are slightly higher in the overall equities. We really have to take a second look at bank stock earnings today. On Friday, we had a bunch of banks report, some private sector banks and some of the big banks. Some of the larger banks reported they beat on EPS. 3 of the 4 beat on revenue, and we're talking about Wells Fargo missing on revenue, but we're talking about PNC beating, JP Morgan beating, Citigroup beating, and they beat on top and bottom line, but yet the bank sector didn't rally. When we got the new highs that we got on Friday in the Dow and the S&P, not in the NASDAQ, but in the Dow and the S&P, those all-time record highs, both on a high basis and a closing basis, were driven by other things. Bank stocks drove the entire financial sector down, and it was the only sector down on Friday. Now this week we've got more bank earnings. We've got JP Morgan, we've got Morgan Stanley, we got Bank of America, we got Goldman Sachs, and we have BlackRock. All of that will be in focus as the earnings season moves on, because one of the things we saw last week, even though we got good bank earnings, we saw yields fall off of weak data from the U.S., weak CPI, weak retail sales, and just average industrial production. That potentially took the Fed to a less aggressive stance, not only in terms of shrinking the balance sheet, but doing a third rate hike for this year. It really kind of pushed them back. So you saw the overall market rally up and you saw banks not participate. That leads me to believe that if we get really strong bank earnings and strong bank stocks, you actually could get the reverse correlation. Bank stocks are very highly correlated to the 10-year note yields. So right now we're seeing yields pretty much flat versus where they were last week. We're seeing banks do the same thing. We've also got a bunch of central banks in play. We had it last week, we've got it this week again. We've got the Bank of Japan rate decision, which we don't expect Kuroda is going to see anywhere near the inflation target he wants. So they're probably not going to do anything unless the yen weakens substantially, maybe past 120 versus the US dollar. If that happens, you could see them raise their 10-year target on the Japanese bonds, but other than that, you won't see them do anything. And then we've got the Riksbank in Switzerland. We don't expect them to do anything. What we do expect is the ECB to change their language kind of drastically. They're coming close to the amount that they can buy in the public sector purchase program, the PSPP. They can only do 33% of assets in there. They're approaching that threshold. So while we don't expect them to change their interest rate level or the amount of assets they're buying, we do expect them to make comments that this is coming to an end because, well, it kind of has to. We also have to watch crude oil. Crude oil seems to have some green shoots in terms of the longs actually getting somewhere, although we're unchanged today. We did see substantial strong data out of China yesterday, both on GDP and on capital spending. So that's going to push crude oil a little higher. It did overnight, although we're not much moved today so far. And we also want to watch the progress in Washington with the Health Care Act. Mitch McConnell, head of the Senate, actually pushed the vote back because John McCain got sick. That took one Republican vote away from the health care plan that Donald Trump is trying to get through, and that's one vote that they can't afford. So there's a lot going on this week. Right now, stocks are quiet. We expect that to continue later into the week. This is Bob Iaccino for TrendyTrade.